then, and that one reported its numbers yesterday post-market hours, and it was a steady third quarter for Bajaj Finance for the quarter gone by. Asset quality has improved, and net interest income growth was seen in the quarter ended 31st December. Mithali, my colleague, is now joining us with the earnings prime print and some con-call takeaways. Mithali?
Yeah, so the company it reported largely inline numbers with their operating performance holding up largely. Well, the profitability it was impacted by mostly one-off charges. The net interest income there we saw an increase of around 21% on a yearly basis. With fees income, it jumped a strong 30%, supporting a 19% growth in their pre-provisioning operating profit. Also, the AUM growth it remained healthy at 22% of growth. However, higher than expected credit costs weighed on the earnings. The impairments, they surged nearly 60%, driven by an accelerated ECL provisioning of 1,406 crore rupees, following the tighter loss given default norms across the businesses. Also, the profit after tax, it declined 6% yearly, because it was impacted by a one-time charge of 265 crore rupees of one-time labor code gratuity liabilities. On the positive side, if you see, the asset quality of the company, it has improved, and also the GNPA and NNPA ratios inching lower, PCR rising to 61%, and the cost of funds that also eased down a bit in this quarter. Also, an exceptional gain of around 1,461 crore was reported from the Bajaj Housing Finance stake sale by the company that provided support at the standalone level. Overall, a quarter that was stable operationally, but earnings that were dented by the exceptional items. Talking about the brokerages, there we are seeing a mixed review. Morgan Stanley, it maintains an overweight stance, target price set at 1,195 rupees, citing strong adjusted earnings and also easing stress. While Citi, it stays neutral for the Bajaj Finance, and the target price that they have given is 1,090 rupees, flagging the one-off hits that the company posed in Q3 and also slower near-term growth despite the stable asset quality. That is what Citi is saying. So overall, a steady set of numbers impacted by the profitability that was impacted by the one-off charges. That was something to look out for.
All right, Mithali, thank you so much for giving us those details. But